Welcome, everyone, to Startup Shuk, where we talk about Israeli tech, startups, and innovation. We are here joined with Joseph Page, the lead investor of Blockbuilders and a member of Crypto Aid Israel. How are you, Joseph?
I'm doing well. Thank you for having me.
You came here from Tel Aviv, Ramat Gan?
Yeah, our offices are in Tel Aviv.
Okay. So, Joseph, impressive background, crypto, and I think this is an interesting time also to talk about crypto. Right now, it's a resurrection, a resurgence of the crypto trend, and I think a lot of people are quite excited about it. So, why don't you introduce yourself a bit and tell us about your background and how you came into this crypto world?
Sure. Definitely a right timing to have me here at the show. Right point of the cycle, let's say. So I'm Joseph. Originally came from Latin America. I moved over to Taipei when I was young, in my teenage years, for ping pong, actually. So I did both my bachelor's and master's in Taiwan. And while being there, it gave me kind of a very wide worldview of how things work. So when I came over to Israel, right before the corona, actually, I kind of felt compelled to start looking at means of, asset growth. And to be honest, everyone around me was talking about crypto back then. When I started working in Israel, I actually had the chance to work behind Michael Marks, who was ex-corporate director of the Mossad. He was my mentor, great mentor to have. And I interfaced with him for around a year, and I kind of found that niche through innovation analytics. I was looking for all kinds of innovative projects that we could sort of acqui-hire behind the corporation we were working for called UST. So that's kind of how I found blockchain, and I got into the rabbit hole. It was a very deep rabbit hole. I haven't found the bottom yet of the hole. So we started with the supply chain side. So the distributed ledger and blockchain kind of allows to have completely trustless precedence and tracking. So that's one project we worked on that was what sparked my interest in blockchain. So when I got into it, I kind of thought, okay, where do I invest? Back then in 2020, there were already a huge set of asset tokens that you could invest on. So I started thinking from first principles, right? Inspired by Elon and Steve, and thinking what people were going to go towards next. What was the best asset to invest on? So I had kind of four key principles, something I did my master's dissertation on, which was hedonism, convenience, time, and speed. We subconsciously go towards what drives our hedonism, something beautiful, something nice and cold, a brick of metal, an iPhone, for example. We like that it's fast. We like that we can save time. We like that it's convenient. So I applied those principles towards blockchain, and I ended up with Solana. I started investing in specifically that asset, amongst others, but primordially in that asset, simply because it was quite different in its offering towards blockchain. Blockchains were by then sequential in nature. So that means that block propagation was happening one after the other instead of in a parallelized form. So Anatoly, the founder of Solana, kind of had this eureka moment where he understood that he could parallelize the blockchain. He was a systems engineer at Qualcomm and kind of went hand in hand with his knowledge. So when I read about that, about the transaction cost and the speed of throughput that Solana had, for me it was a no-brainer. So I invested pretty much too much. I was overexposed in Solana and did quite well. So by the end of 2021, I was already deploying into pre-seed projects directly at founders within Solana. And that's how I met the partners at Market Across and how we ended up building Blockbuilders. Blockbuilders came to be with the idea of finding these pre-seed early stagers at a stage and at a blockchain that are both early in terms of investment, but most importantly, innovative. We're trying to look for projects within blockchain that are tokenized. We really like looking and devising mechanics with the founders on how these tokens can function. And that's what we've been doing since mid-2022. We've invested in over 30 projects, and we still are. So yeah, that's a little bit about me, about Blockbuilders. Love to hear what we have in store.
Before I react to that, can you move your mic a bit to the right? Like this, so it's directly in front? Yeah.
Cool.
Amazing. Cool. Such a in-depth background history. I love that. Let's wind back a little bit to the inception of crypto, perhaps for our listeners who aren't too familiar with the concept. Why do we need this blockchain? What is it, and how does it help humanity?
Cool. So let's go back to layman's terms in terms of the value that it brings to the world. Think of banks, lawyers, people that check insurance, for example. These are all what we call intermediaries. These are intermediaries of trust. We need to trust a third party because otherwise we might be swindled by the second party we're trying to deal with, right? So if I'm transferring you $100 or you're transferring me $100, I need to make sure that the bill, if it's cash, is legit, right? It's not a fake. If I send you something for those $100, let's say a cap, I need to ensure that the $100 I get are legit before I send you the product I'm selling. So what we do is trust all types of institutions for this. Credit card companies, banking companies. When you're buying a house, you trust a real estate lawyer. You trust real estate agents as well to sell you these assets. And along the way, these people take a lot in terms of percentage points, right? So when you're transacting in all of these means of exchange, you end up losing a high percentage. So it becomes an inefficient market. And you can apply this to everything. There's now projects that are doing this for telecoms, for example. Deploying all of these antennas, for example, is highly cost ineffective for telecoms like AT&T or Verizon. And what happens is that if people took that overhead, it would become much cheaper for the telecom to provide services, right? So you basically decentralize, again, the intermediary, in this case, a telecom company, and you distribute it across people. You distribute that trust across people, you end up with a more efficient market and a lot cheaper cost of telephone service. And this applies to everything, right? To banks, it applies to legal documents. Once you remove the necessity of a third party and having to trust them, you end up with what you call a trustless system. And that's a distributed ledger, right? So what cryptography has been trying to solve for the longest time was that issue, right? The issue of trust. So the Byzantine fault, which is the understanding on how to mechanize this distribution of trust without losing or getting a supermajority of bad actors, right? So the way the distributed ledger does is that it punishes those machines or those validators or those workers that are putting these transactions that are bad actors or that are they don't have a lot of uptime, for example. They slash them and they penalize them. So everyone's incentivized economically to be truthful with their ledger, which means that the more you distribute ledgers across nodes, the more trust you can derive from the system, right? So if you have 10 people, there's a high likelihood of collusion in that example. But if you have 2,000 distributed geographically across the world, there is a non-zero chance of collusion, but almost zero.
What do you mean by that, collusion?
Collusion, it means that the nodes would get together in a conspiracy theory room and talk on how to steal the assets from the ledger by lying in terms of what's written on their ledgers, right? For that to happen, you need a supermajority of 51% or above to make sure that what's true is true. And for that 51%, it depends on the blockchain, right? But let's average it out at 51. For that to happen, you would need, in the case of Bitcoin or Ethereum, a humongous level of coordination globally for people and companies, private and public companies that have completely different interests, right? Geopolitically, geoeconomically. So it becomes highly unlikely that they collude, ending up with a system that automates trust, basically. So with the blockchain, you now have a full set of infrastructure tools that allow you to design all kinds of trustless systems. I'd love to touch upon a few, but I know you have more questions.
Don't worry, we got a lot of time. All good. Talking about what Blockbuilders is. You gave us an introduction about what they are, but what is Blockbuilders doing right now in the crypto space and blockchain space in Israel?
Cool. So, Blockbuilders, as I said, started out mid 2022. It was kind of the early innings of the bear market. It's actually one of the better times to invest in pre-seed early stager side of things, because the founders that actually stay during the bear market are the people with the highest level of conviction in what they're building, with the least to lose, I think. Whether or not they have money, it matters very little to them. They want to build. And that is a stark contrast from what we get on bull cycles, where everyone's making money and people start building to kind of grift their way into the cycle. Whereas builders that stay during a bear market are just people with a lot more long-term vision. So Blockbuilders started out looking for these people. I think we started out quite in a great stage in time. And through Market Across, I don't know if I mentioned, but Blockbuilders is sort of a sister VC arm of one of the biggest PR agencies in the world, crypto agencies. So the bandwidth the agency has is just huge, right? So we're able to see a lot of projects of all kinds. And we have pretty much a privilege to work with the founders, not only on PR, but work with them on a more day-to-day basis in terms of deal flow, BD, token economics, the token mechanics, and helping them out grow. Yeah, that's kind of what we're doing mostly. Just recently, we also started running RPC nodes, which are what we spoke about, the nodes that kind of help blockchains derive that trust, right? So we're helping our projects decentralize by running nodes for them, and some of the foundations the agency has been working with throughout the years, yeah.
Talk a bit about the difference of the projects built by founders who are here for the long term with conviction compared to the ones who are just quick for the buck. And is it perhaps the same, and the difference is just from the founder, or is it in the project as well?
I would say both. So blockchain is a highly transparent industry. Most people have the wrong conceptualization of how it works, but pretty much code is open to everyone, right? So we have a term within the industry called forking, which means copy pasting basically code. That's pretty easy to do because most code repositories in GitHub are public. So if I want to copy paste a lending borrowing protocol, I can do it within a day. Just put a different branding, call it a different name. I would call that practice kind of grifty, right? And there's a lot of founders that easily manage to raise during this stage of the cycle. They're doing something pretty much just a copy paste, but are hopping on hype trains, right, behind new blockchains or behind different blockchains, but they're putting an extra value add or adding incentives, airdrops for people to these protocols, and then they have artificial volume in their forked project. So all of that noise, it's almost impossible to mitigate during a bull cycle. Whereas you're in a bear market, it's a lot easier to see which founders are actually innovating, building out on their own, and building out with their own ideas. So, and in terms of the difference, right, there's a lot of new stuff that's happening within the industry. Decentralized physical infrastructure is one of the verticals that we're the most interested in, simply because it's so cool, right? It gives physicality to blockchain. Just in a nutshell, physical infrastructure that's on a blockchain allows you to earn through whatever infrastructure you have, whether it's a GPU, the camera, or the microphone on your phone, or you can put a camera on your car or a module on your car and start making money through these modules simply because you're selling that data to the blockchain, and the blockchain is distributing that to B2Bs, right? For example, there's a company called Hivemapper. It's a cool, very interesting use case because Google, they themselves have a huge fleet of cars, right, with cameras that are worth hundreds of thousands of dollars mounted on each car, and the overhead is on the billions for them. It takes them around 3 years, I think, to map out the United States fully, and this never stops, right? Like they always have to keep renewing their maps. So the idea of Hivemapper is like, wait, why do we have to buy a whole car, a camera, and pay an employee, where when we can just make a camera that's worth $300, $500, put it in a car, and get everyone in the United States to map out? the roads for us. We would be paying them. They would be directly interfacing with the blockchain, and the rewards would be paid out in the native token of the project, right? So in essence, you become a service provider, whilst the big companies like Google are highly incentivized to pay for these maps because they're orders of magnitude cheaper than what it costs them to create these maps, right? And also they're not only cheaper, but they're newer. They're fresher maps, right? And you get that by distributing that trust across providers. So that's an innovative case, right, that I would say that came out of a bear market. So yeah.
You mentioned about open source projects. Tell me more why people do this. Is this something that the community accepts and really put forward as their value, or is there a strategy to it because business, is for profit and you have IPs? What is the logic behind this open source?
So let me give you an example with NFTs. Open source projects, we call them within the industry public good projects. Native blockchains, layer 1 blockchains like Ethereum or Solana, are actually highly incentivized to fund and grant projects that are building public goods. And why is it that in their best interest? It's because public goods are actually infrastructure. Think of it as the rails for the economy to grow. So projects that are building public goods doesn't mean that are not for profit. They're actually profitable projects. And these protocols, they charge a very minimal fee on a transaction basis. So if you want to mint NFTs, you want to mint 100,000 NFTs. In the case of Metaplex, it's a public goods project. It's an infrastructure project. Why does Solana want to fund and grant these people to keep building, and why people need these public goods? It's because they don't care about creating the infrastructure for NFTs. They want to make art and distribute that art, but they need the best rails to do it in the cheapest, fastest manner, right? So public goods become super important in blockchain because the faster you can grow a blockchain, the higher the competitive edge for both the project that's building on that infrastructure, the infrastructure, and the blockchain, right? So it just once more makes it a lot more efficient and effective in capturing more and more new users.
The camera project, Maven, what is it called?
HiveMapper.
They have one singular camera that people can use, or how does it work? They use people's cameras?
I think they have a whole array of products, right, in all price ranges. I think the latest one costs between $500 and $600, and it's not a single camera. It's actually quite an impressive piece of hardware. It has multiple cameras and sensors that are trying to also reduce the noise in case of vibration, right? So if you're mapping roads in Bnei Brak here, you're going to get a lot of vibration, and that doesn't look good in the end picture. So they're using all kinds of tools like artificial intelligence to patch these maps and multiple cameras that take multiple pictures a second to basically clear out the picture and sell a very high fidelity picture to their buyers.
And the people who are doing the service, they're paid via the native tokens.
That's
meaning
correct.
the tokens made by HiveMapper.
Yeah.
And the value changes relative to the dollar and...
That's correct. So the native token itself either mints or burns. I'm not sure of the mechanics of this particular project, but people can also speculate on the value of the company through the token, right? So HiveMapper can and probably will grow this bull cycle, both through speculation and through usage, right? So the more users they get that are gaining rewards, the more movement there is behind the token, and the more speculators are going to want to buy, right? So it becomes a lot more valuable for users, in this case, the mappers. I think they call them bees or something. They have a very cool naming. The token's name Honey. So the bees, or in this case, the mappers, are highly incentivized to keep mapping, right? To keep driving and making more maps, simply with the end goal of having more and more tokens, with the expectation that the company becomes more and more valuable.
This is an interesting relationship between the users of the company and the company itself. In traditional companies, people can make money by working with them as employees or purchasing their products and pay them money. But it is separate from the value of the company, which is also traded in a different market. But now this is sort of linked. How does it affect companies?
Well, it depends, right? If a company's value is pretty much only aligned with their token, people will sooner rather than later find out that the token's worthless. And it truly hurts the project, right? Because they sell tokens to investors, to us, right? And if we don't see value in the company and we see a lack of movement and a lack of product market fit for the specific project, we are rarely going to hold these tokens. We'd rather offload and invest in better, newer, shinier stuff. So yeah, it's a highly interlinked relationship, and as you said, very different from traditional finance and traditional stocks for companies, because it's all in the open, right? These are tokens that are being traded 24/7, and they never sleep, and it's highly interlinked between the hedonism of these users, how much they value both their work, in the case of physical infrastructure, the case of these mappers, right? How much they value their work and the work they do for these mapping companies that buy the maps they're mapping, versus how they value, other things like Google itself. Google is also a mapping company, you can say. It's a mapping provider. So if you're a user, what would you rather do? Be exposed to this potentially global new mapping scheme, or just buy Google stocks that are growing at a very small percentile year over year.
Interesting. So we have this plethora of projects going around. What is Blockbuilders doing that is helping real founders with conviction to build projects?
Well, I think our main value add is on the connections, right? As I said, we have a huge bandwidth of companies of all kinds within blockchain in our deal flow, and we try to strive to look for that Tel Aviv mindset of the B2B, B2 enterprise side a lot more than the B2C side, simply because consumers need a lot more time to be educated into what blockchain is, and that will take a longer period of time. Maybe this cycle we might find a killer app, right, that brings blockchain users to the billions, but if not so, the use cases will remain still niche, and users need a lot more time to be educated. So we try to stay on the B2B side because it's a lot easier for us to connect our projects to companies that necessitate the services they provide, right? One of the deep end projects we're invested in, called Sorchain, it's a module on cars, and it's its own blockchain, actually, on Cosmos, that's allowing drivers to earn by giving data on road quality, on car health, the amount of gas, distance traveled. Car companies, huge car companies like Suzuki, Toyota, Ford, pretty much every car company in the world actually requires and needs this data to better their products, better their whole entire product offering. So it's actually quite hard to accrue, because it would, first of all, probably violate a lot of GDPR compliant parts of the legality behind it. But within a blockchain, you just upload this trustless data, right? And you're selling it in bulk. So I think the value we can provide in that case is just not only getting individuals to get these modules on their car and start earning, but getting companies, right? In Israel, we have Mobileye that might utilize their infrastructure. In many other countries, there's insurance companies that will definitely need this infrastructure. So this is kind of what we try to make the connections on. And obviously, as these companies grow, we have a huge network of other venture capitalists that are eager to invest in companies that have high potential of growth. So that's something we do as well. We help them raise, we help them get connected with more clients, and overall grow the pie.
Very interesting. How do you see Blockbuilders evolve as this industry progresses, and also talk a bit tangent to the progress of the whole ecosystem as a unit? Where do you see this technology will be applied most in the future, or is it too early to tell?
I think it's too early to tell. I try to keep myself intellectually honest, especially in a bull cycle. Things happen so fast that it's very hard to understand where the general zeitgeist is moving towards. So I don't try to fool myself in knowing what's coming, but I try to plan. in Blockbuilders, we definitely want to expand. The more portcos we take on, the thinner my bandwidth becomes. So definitely in this cycle, it's something we want to do is trying to khas v'chalila say institutionalize, but we're trying to grow, especially like in our analytical capacity. Simply because like blockchain is such a nascent, like high growth industry that it's just very hard to keep up with. Growth becomes exponential, especially on this part of the cycle. Yeah.
What advice or suggestions you would give to entrepreneurs, early entrepreneurs building in this space?
It's very easy for entrepreneurs in any vertical of the industry, healthcare, I don't know, food tech, to look at what the majority of consumers are buying and work on that. It's a natural reflex to go to the highest market share of things, right? So if you want to go into health tech, you most likely want to go and sell to the US, right? Because it's the highest market. So I see a lot of founders that are starting in blockchain make the same mistake in terms of the blockchain, right? I think we're so early in the cycle, and Ethereum itself had such an explosive growth since 2014. It basically became a blue ocean for them. And as of today, it still is the blockchain with the highest amount of value locked and the highest market cap. Tools for Ethereum are fully built out. There's a plethora of tooling and automations you can find within that industry. So naturally, I think entrepreneurs are, pushed in a way, gravitate towards Ethereum simply because the equation in their heads is simple, right? Okay, that's where the most users are, the most amount of money is moving in, so that's where I should build. And I think it's quite unintuitive to think otherwise. But in blockchain being so early, you have to think where the people are going to be going towards, not where the people are at. So my recommendation would be to try to be a degen, try to be in the cultural zeitgeist of things, try to look where the sharpest people of the bunch are working on, are gravitating towards within blockchain, and choose those chains, because otherwise you will learn nothing. I think the most lessons are learned whilst you're not only building your product, but you're also helping your community and the people around you. That tends to be a lot more condensed in smaller blockchains to build out and solve problems together. I think that's my recommendation to founders. Is think out of the box. Look for the blockchain that first serves your use case. And secondly, look for the blockchain that you as a buyer of the token can have the most conviction on. Because if you think as a person, this blockchain is going to grow and the token price is going to grow, why not your company too, right? And also the competitive component, right? Like there's a lot more competition within Ethereum. So it's a lot easier to make it in the blockchain. Now, you never know, right? Blockchain is a very volatile industry, and you never know which blockchain is going to be the winner. For example, in the case of Solana, which is now pretty much consensus that it's the new thing, right? The better blockchain, the better performant blockchain. Just late 2022, it crashed up to $8. And many notable projects within Solana waved the white flag and said, we're moving out. And they're feeling the burn now. Solana has 10x since then, and it's pretty much in the cultural zeitgeist. Most of the degens are trading meme coins within Solana. Most of, now small NFT market volume is shared within Solana and Ethereum, and very solid projects within Deepin and AI are even being built in Solana. So I guess the lesson there is try and understand your own conviction on why you're building where you're building. Eventually, the blockchain is an infrastructure component that should and will, in the future, be abstracted away. The end user will not care which blockchain your product is on, as long as it works as intended. So if you need speed, if you need a very low cost, if you need something that's highly performant and highly composable, then you want to choose the blockchain that gives you that, right? Regardless of where the users are at. Because if the product is excellent, it's going to find market fit.
I consider myself an outsider to this industry. And I think with many people, excitingly surprised that the industry had this bounce back that I think if we would apply it in the time scale to another industry, in many other industries, people would have concluded their excitement, it's done. But what do you think caused this bounce back and why that is?
Well, I think 90% of the people did, right? You've seen the news cycle during 2022. Everyone called, you can see it even on the Google searches, like blockchain's dead. And the truth of the matter is actually a little bit more based. Blockchain itself is an organism. You can think of it as a live set of orders, zeros and ones that are moving between buyers and sellers. It's pretty much the interaction, speculative power of the people. S&P 500 on steroids, right? And why is it so volatile? Why does it go down 90% every 4 years? Simply because there's little to no product market fit. It's highly speculative. So people fall under this spells, that are relatively long of, wow, this technology has no use case. And then it becomes social consensus, right? So everyone starts selling. And this cannot be controlled, right? Unlike traditional stock markets that work from 9 to 5 and have all kinds of controls, right? The SEC controls insider trading, controls stock buyouts, distribution, etc. You cannot do that in blockchain, right? It's permissionless. It's trustless by nature. So it's up to the macro to decide. And I believe that the more wealth that gets into the blockchain, the less volatile it would become. So just by context, I believe there's 90 to 100 trillion dollars of GDP being produced by all of the world economy together. Blockchain right now, I think, accounts for 2 or 3. So think of it, 2 or 3% of the world's wealth is right now sitting on blockchain. So with that little amount of supply relative to the total net worth of the world, it really begets a lot of volatility. But as more wealth is being transferred to blockchain, as more wealth is being stored in the blockchain, we all believe that it'll become less and less volatile because less and less people want to see their assets and what they're saving on go to zero, right? It becomes less and less speculative and more social consensus that blockchain is the new world order in terms of how we store our wealth, how we transact within our wealth across borders, and how we invest. Then it becomes a lot harder when there's a lot more money involved to move the needle.
YC has this term called SISP, Solution in Search of a Problem. And they highly advised founders who want to apply to YC that if this is something they're experiencing, you better wait and really find a problem you're passionate with, then bring a solution that you can bring to YC. But then recently they've been accepting a lot of crypto and blockchain solutions which might indicate something about the industry. Tell me a bit more about how do we solve this? Is it just about a matter of time until we find a perfect problem to be applied, or several really? There's a lot we can use blockchain for, like you mentioned, insurance and other things. Is it a matter of time, or is it something we can really affect?
It's a matter of time. In my opinion, the more we tinker with these new primitives, the easier the path towards product market fit. So I do think there's already use cases that are truly solving huge needs, right? But because of multiple legal and regulatory and public perception issues, are having a hard time just gaining general public trust, right? And having public consensus that these are the primitives that we're going to be needing in the future. But in my head, it's already a given that there's use cases that will be serving the world for hundreds, if not thousands of years to come. Finance is the biggest one. But as I said, decentralized physical infrastructure and trustlessness. Think of AI, right? This is not my domain of expertise, so I wouldn't call myself competent. But with the advent of ChatGPT and the power it brings, right, and the opinions it forms by the information it feeds the people that utilize it, you'd want all of these large language models that are being trained to be trained in the most trustless fashion. Because otherwise, the people that curate always have a bias, even subconscious, political. It could be a left versus right issue. It could be a racial issue. It could be a geographical conflict issue. You want all of these models to represent the world's thinking as a whole, as a unit. You don't want these models to represent what America thinks or what China thinks. You want it to be trustless. So these use cases, for example, there's companies like Jensen or Akash, or on the supply side like IO.net or Nasana, who are supplying both the GPUs for these large language models, but are also creating a framework that is trustless to train these models, right? And eventually, it brings us back to the necessity of these primitives. I see less than a decade before it becomes world consensus that blockchain does and will be solving a lot of important problems, right? But if we're going back to, solutions looking for problems, 90% are solutions that don't even have a problem yet to look for. So, yeah.
There was a quote I heard somewhere. It says, it's easier to bring futuristic technologies, to adapt them to the present time than to adapt the present people and culture and society to the futuristic technologies.
Wow, I would say that's quite true. You need to choose stuff for the average Joe, right? Otherwise, it's very hard for them to even contextualize what it means for them, right? So the more you dumb down an analogy and you contrast that with the present day and the real world use case today, the easier it is for an average person to understand what value it will bring tomorrow.
Right. One last thing. Well, we have a long time, but one thing about blockchain that I want to ask. If you think of economy, or at least I'd like to think of economy, the movement of the market as sort of the brainwaves of humanity as a person, right? Because it really reflects what we are prioritizing, our interests, right? What we are doing, and it shows in the market, the movement of prices and products and services and demands. But the thing with the market, at least the traditional market, is that it's controlled by a lot of authority. Would you say that this blockchain and crypto would be a more accurate representation of what humanity is thinking and feeling and doing, the zeitgeist, because it has, supposedly, or the plan is to have no single majority, or would I say authority influencing it?
1,000%. Stock markets today are highly regulated, highly controlled, and they have humongous barriers of entry, to the degree that I think less than 0.05% of Africa is exposed to American growth in terms of stocks. Also Latin America, also basically the emerging world. How do you open and expose these people to wealth generation otherwise, right? The other thing is that stock markets operate on a 9 to 5 basis, right? So it's highly less liquid in terms of movement and volume, volatility, all of it. In the blockchain, it's all working 24/7, nonstop. So, as you said, the brainwave or the zeitgeist is a lot more accurately represented on a blockchain than on any sort of stock. I have to say that today the safety measures for traditional markets are higher, right? So this is something we definitely have to work on to make investment, educate most people in how blockchain works, to make it safer, basically. That's something that's still a long time away, but yeah, the global representation of what we think is right will and is already happening on the blockchain. And it's a lot easier to represent cultural shifts and movements of interest, right, into new things, better things, funnier things, right? The meme coin frenzy is a great representation of that. It's been going on for like the last 4 or 5 months, and it started out with a dog with a hat, dog with hat. I think most people that saw it just chuckled, said like, wow, that's funny, I'm gonna buy a couple. And everyone in the world, I want to say everyone, but a lot of people in the world that were speculating upon these meme coins decided that it was consensus that the Shiba Inu looked better with the hat. So it's once again, like the zeitgeist of the emotions of these degens, are represented in a coin. Now we have Bowden, for example, that it's a take on Joe Biden, obviously. And because it's election year, it becomes a lot more relevant to people and to the cultural zeitgeist. So yeah, it's a lot of cool stuff happening, especially in a bull market, because you get all of these new entrants or old entrants that are renewing their relationship with blockchain. And the more participation you get, right, like the closer you get to the mean, or to basically what is true in terms of what everyone is feeling and what everyone's agreeing on.
I'd like to touch a bit on what you said about the shift of interest. If you think about money and the current financial system as the medium of interaction of humanity, of how we exchange value, right? There is a system to it, and that is the traditional system. But if we were to translate and to change in the future to this more decentralized system, how would it affect politics? How we lead countries, how we communicate with each other, because the medium of interaction is changing. It's like trying to speak in another language.
Well, I didn't major in geoeconomics nor anthropology, so it's beyond me to give you an accurate understanding on how would that play out. I'm hoping positively, but it's very hard to tell. But we can go back to first principles and try to understand what it means to exchange and what means of exchange are to us, right? During the agricultural revolution 12,000 years ago, we started adding value to things. The first one, well, I would say second one. First one I think was women. The second one was land, right? We started valuing land because within land we could plant and reproduce our stock, our seeds, and our livelihood, basically. So we depended on that land. Hence, we started attaching value not only to the land, but what we could produce. So that begets a barter system, right? I am making corn and you're making coconuts, and she's making tomatoes. I want some tomatoes and also some coconuts, but I only have a bunch of corn. So relative to how much corn I have, people would barter, and a mean price of what things are worth, right? So I would give 5 stalks of corn in exchange for 2 coconuts and 20 tomatoes, right? And then I would be able to feed my family a very diversified diet because I have all of this stock of corn, right? So after the barter system, we needed a more complex, a more all-encompassing means of exchange. We needed an entity to trust. So that becomes the government, a centralized entity that can issue these means of exchange where we can derive that trust towards our economy, right? If I want to buy an iPhone from you, I wouldn't pay you in tennis shoes. I would pay you in dollars or in shekels. It's because I derive the trust in both the American or the Israeli government to not devalue that money I have stored, right? But more and more, that becomes less and less true. We saw that in 2021 after the pandemic, all of the printing happening by the Fed. We understand that the Fed is not a decentralized entity. It's an entity controlled by people, quite sharp people, but still by people. And it's very hard to model economically how much supply of cash we need. It's very hard to model what people will do with that cash. We can only hope for the best by reducing interest rates or increasing them depending on the state of the economy. And it's all a game of people, right? There's an intermediary of trust. So going back to how would that play out, I don't think actually that governments control us only through the means of exchange, through money. It's a major component, but I would say it's identity, right? Because a government is only derived by a sense of belonging and a sense of nationalism. And that sense of belonging is a sense of identity. And that translates factually into a teudat seut, or an identity, right? A ID card of sorts that says your name, your place of birth. And that way, all kinds of economic institutions, insurance agencies, banks, hospitals can trust you as an individual because they trust the government that they can ensure you say who you say you are. So I think it's a marriage between the power, governments have. It's a marriage between controlling your identity and knowing how much you're worth, right? Because governments can rarely control our economic output. They control it through taxation. Most developing economies can't even control 20% of their population through taxation. So it becomes an issue of identity, right? And making sure that this money can be pegged to an individual, to a person, to a face, to a name. So how would that play out? I don't know, because believe it or not, also blockchain is trying to solve the identity issue, which is one of the bigger ones, I think. It's the hardest to solve because identity usually is rooted, right, to the earth, to where you come from, to your culture. And culture is something super abstract, right? You're from Indonesia, I'm from Latin America, and we have vastly different cultures. We eat vastly different foods. We support vastly different sports teams or play vastly different sports. We have vastly different customs, and that's all intertwined with identity. And I think it's very hard to get populace from two opposing sides of the world, say China or the US, to form consensus behind a single form of identity. I think it's close to impossible, right? China specifically is a highly collectivistic society and it lives in its own bubble, whereas the US is a highly individualistic society, which is, well, depending on which president they have at the time, highly open to the world and highly involved in the world order. All of this, it adds a lot of friction to have a single point of control. And some would look at it as a single point of failure, right? Like you don't want to centralize the entire world order or identity behind a single solution. So yeah, I have zero idea how this would play out. But it's cool to be living in a time, in this reality, in the timeline of where the change is happening. Because it will happen, and it'll happen in our lifetimes. So it's quite exciting.
A lot of points there that I'd love to touch. Talking about the concept of identity, obviously right now it is very interesting how we identify ourselves. I'd like to think of it as the government lending their trust to us, that we can use this trust to communicate with healthcare, with legal, like you said, with a teudat seut, an ID which I can show to people and they would trust, you are a person, I can trust you. But this thing was issued by the government. Now, talking about a global identity, one that would traverse borders, we've seen a lot of projects trying to solve problems in this space. Talk a bit about what problems are there in regards to identity. And obviously, we're going to talk about the World Coin, which is a huge project Sam Altman is building. Talk about it.
Well, I could get a little nerdy about it and talk a little bit about sci-fi stuff, but it's something actually a lot of astrophysicists and smart people talk about, is what stage we're in as a species, right? The idea is that we're below stage 1 civilization wise. So there's 3 stages. One that controls the resources of its world, the second stage is the resources of its solar system, and the third stage is the resources of its galaxy system, right? According to many physicists, we're not even at stage 1. We don't control even a small percentile of the output of the world's energy. So we're very low in that. So connecting that back to identity, if we are growing to be a society that unites under one flag in an eventuality, I think that's happening And that's manifesting in many ways, right? Like the fact that you and I are living outside of our countries, that you and I are dating people from completely different cultures, something that our parents didn't even go through. Something that just happened in the last 100 years, right? This diversification of the world. It's, I would say, like spores of each country are leaving, and what's it called? Pollination. It's more and more interconnecting the world, right? Through means of people. And eventually, the idea is that we become a sort of network unitary state, right? Where nobody needs to show a visa as long as they can identify themselves, they can move freely around the world. And eventually, we become a society and a culture that has a unitary goal, a unitary sets of beliefs at the very least, or at least a blanket set of beliefs on the base level that allow us to accept everyone from every race and religion. So yeah, I think for that, again, WorldCoin is the example. You need a sort of understanding of identity that's very different from what we have today, right? But I don't know. I might be just dreaming too early in the stage of where we're at.
We have a lot of systems in place to translate identity between borders, where that's called visas, right? But
And passports, yeah.
and passports. What is the reason? Why is it important that if we indeed are progressing towards a globalized singular identity, that it would not come from any government?
Because of the bias we spoke earlier, right? Like every specific individual government has their own agenda and their own worldview that relative to the others is biased, right? So you want global consensus by the people of the world, not by the governments of the world, to understand how we can identify each other, if that makes sense.
Sure, but would the issuer of this new global identity be slowly gaining power and
Well, that's the whole point, right?
Right.
I'm not privy to the mechanics of WorldCoin, to be honest. It's something very cool, and it has a hardware component, and it has a face to it. So I'm not very bullish on it because it will not derive that consensus we need. So ideally, an identity token or an identity component within a ledger, an identity address or an identity wallet, whatever you want to call it, has to be issued by a global consortium of people that have no stake in it, zero stake in it. It begets another problem, the same problem that OpenAI had in its inception, right? Not for profit. Nothing that's innovative, that can be expanded, that can grow in a rapid sequence, in a global terms, grow if it doesn't have a profit incentive mechanism. And that was a huge problem for OpenAI. That's why they changed their structure. And that's the main problem facing, I think, identity, or the main problem that will face identity if we ever going to be putting it on a ledger, is understanding that the incentive mechanism for profit has to be somehow individualized and socialized. And that's very hard. That's a very hard thing to do, because once you do that, the people that built out the protocol, that built out the system of identifying doesn't have an incentive to keep doing so. Doesn't have an incentive to keep growing it. And usually these types of incentives are very moral, ethical in nature. And when that's your driver, being a good person, you just do things a lot more slowly, because you'd rather spend your time growing your economic output, subconsciously even, right? Rather than creating a public world good.
Regarding the face attached to this, projects who are in the goal of being decentralized, is it possible to have a huge collective of people who have the same incentives and, well, probably not incentives, but the same goal to build a system that will help many more people? Can you give examples in history where this have worked? Because in most things in the current time, a company, a project, a startup, it's always been led or pioneered by a single person with a face, and of course that person's identity will be attached to this project. But if you want to start something that belongs to no one, how does it work?
It doesn't. We're a tribal species. We look for a leader by nature, and we look for structure. Many societies like Israel are highly flat in their hierarchical structure, right? Commanders and soldiers, they talk to each other on a name-to-name basis, But other structures like Japan or Taiwan or even Indonesia are highly hierarchical, right? where there's a very defined chain of command and a very defined emperor at the top, right? And subjects at the bottom. I would say there are many cases that show on a very small scale how this can be done in a decentralized, socialized fashion, but it's not within our nature. As humans, we are highly tribalistic. We cannot create even a decentralized primitive without the necessity of a face to it, a leader. In the case of Ethereum, you have Vitalik, and in the case of Solana, you have Anatoly. And both of these are highly sought after personas. Like, they're romanticized and they're just people, and they try to be humble too about it, but want it or not, they were the creators of these primitives and people will look up to them because of what they did. It's in our nature also to derive a sense of safety behind the trust of our leaders. So you sleep well at night because you know that Vitalik and Toly got it, right? They got it for you. I think without a leader, at least in how our current society is formed, without a tribe behind an endeavor, for profit or not, it's very hard to grow, right? But the profit component to it, what we touched upon earlier, is a mechanism that's almost indispensable. Like, you need a for-profit model if you want to expand the product or service you're selling to the world. Otherwise, you will be drowned by competitors with a better model for profit.
So where were we?
We got very philosophical.
That's how we like it. That's how we do it here. We just talked about business, about people, and then philosophy. It's always the case. Yeah. Maybe that's just also because of what my interests are. But okay. So we spoke about WorldCoin. We spoke about identity, DeFi, and the future, basically, right? I'd like you to shed some light on the current new trend. Previously, the limelight was on blockchain, crypto, and now I stole the show. What do you see challenges that might face, because previously in the show of blockchain and crypto, which they are coming back, there's a lot of challenges, and not just technologically or infrastructure, but in regards to finding use cases. Now, AI have found a few use cases, right? They found a lot of use cases. But what other challenges do you think they might face learning from the previous star and the stage, which is crypto and blockchain?
I think they're two different beasts. I don't think they'll face particularly challenges. I do think that in terms of how we live our lives and our day-to-day reality, AI has a lot more potential to change the entirety of our day-to-day. Case in point, right? I don't know if you've read this book by, I think, Cixin Liu, The Three Body Problem, right? It's a very good book.
Now we're Netflix.
Yeah, it's now on Netflix. Basically argues that as a society, we're growing exponentially. And I think AI is kind of the forebearer of that, right? As we grew our economies and our output, we started becoming a lot more efficient. And artificial intelligence, or a general intelligence of sorts, is kind of the culmination of all of that reserve output, let's say. We have enough economic output now to create such a thing, or we will have sooner rather than later. And that puts us to think, right? Like, I remember when I was a kid, like my first eureka moment, kind of like the moment I knew I wanted to be working closely with the cutting edge of technology, was 2007 when Steve showcased the iPhone. The second time for me was when I read Satoshi's white paper for Bitcoin. And the third time was hands down, I think, equal or on par with how I felt like physically when I saw the iPhone, was ChatGPT. How it would bring so much change, exponential change, in such a short period of time even scares me. And now we're normalizing and we're internalizing this reality. At least we try to. But I think AI is going to face just plethora of challenges that crypto doesn't even need to face. It's more even existential, right? I think crypto creates new means, new methods, and more efficient methods of exchange, hence liquefies our economy even more and makes more jobs. AI, if not controlled in a short period of time, like maybe in the long term, we can adjust. But because of the exponential growth of these models and how powerful they're becoming, it might be just something that happens too quick and it leaves a lot of people jobless, So I do tend to be highly optimistic on my worldview in terms of how nimble we are as humans to change our mode of work and our orientations and our core competences. But it's definitely a completely different beast from the Industrial Revolution. This era is a completely new one that I don't think anyone's really thought in depth how deep the change will be towards everything, right? Our social interactions, our day-to-day work, our day-to-day lives. To make and produce any service or product would take 20, 30, 40 people if you wanted to make a high-tech service on a global scale. Now you can do it with 5 or 6 avid ChatGPT users, Copilot users. It's scary, no? To think how quick that happened too.
Right.
But yeah, it's definitely not my area of expertise, so I can just be scared in everyone's behalf.
To speak fully about opinions, do you think, and I was debating this with another founder, we spoke about how the utility of being open source is quite different in terms of AI and blockchain, crypto. And crypto, blockchain, yes, you want to build something that people can trust, and so it has to be owned by, everyone. But this one, it's a bit different. What are your thoughts on that?
So as I said, this is not my area of expertise. So we tend to rationalize it with what we know. The larger language models, like the ones Google and OpenAI training, are usually going to be, or most likely going to pan out in being the basis, kind of like the layer 1, let's say, of AI inference. And then using these models of understanding, companies will create more niche use cases, right? Case in point for us in crypto, I don't know how often you spend or waste your time on Twitter, but there's this new GPT called Grok on Twitter that is learning from the data of Twitter, right? It's proprietary. They created this with all of the voices of my industry of blockchain, right? Like crypto Twitter is a thing and it's where all of the blockchain people are, right? Generally speaking, the world talks on Twitter, but for blockchain specifically, it's kind of where the cutting edge, right? It's not on LinkedIn, it's not on anywhere else, it's on Twitter. So Grok became already, like in the past few weeks, I've been using it a lot more than ChatGPT because my use cases for ChatGPT were trying to understand how different blockchains work, how the interactions between each and other protocol works. If I had more technical questions, I would ask GPT-4 or Gemini. Now I'm asking Grok because it has better data, right? So it will be the same for anyone, for medical practitioners, for people in food tech and the restaurant business, any vertical industry that can kind of narrow down niche and create a better model for their type of clients will usually, I guess, will go towards being more profitable than the larger general purpose model, if that makes sense. But that might be just me rationalizing the way I see things through blockchain in an AI lens.
Right. That's the point. I like to see people's different perspective from different industries on certain topics, and it's quite insightful. If you talk with someone from healthcare, even though they're not an AI scientist, it's always something new that they bring to the conversation. This is why I brought it up. But there was a nice world tour around AI, around things going on. Let's go back to the topic of this podcast, blockchain crypto. As an investor, what would you hope, or what do you hope to see more in the world that people create? Obviously, we've spoken about what is and what people are building, but what do you hope to see?
Quite a broad question, but I'm I'm a globalist just out of the nature of how I've lived my life, right? I've lived in many places, not as a nomad, but stationary, right? Learned new languages, new cultures, stayed within different subsets of people. I think I would want to see more and more interconnectedness through blockchain. How that pans out can transform in millions of ways. And as an investor, I don't particularly invest in behind this train of thought, but emotionally, it's something I would like to see. Practically, and as a financist, I would like to invest always in companies that are reframing and changing the nature of the solution to an existing problem, right? This can manifest in a different way, in many different ways. For us, like we have a very deep focus in decentralized finance and decentralized physical infrastructure and decentralized AI, kind of the narratives we're looking at. But there's all kinds of things, right? Right now, there's a lot of hype behind Telegram and Bitcoin. Actually, Telegram has its own chain now. It's called Ton. And you can do all kinds of funky things now with your wallet within Telegram, right? You can trade within a chat bot. You can play the casino within Telegram. So on a personal level, I don't think we're going to be putting our money where our keyboard is. It's just too open kimono. But it's interesting to see, like how the narratives always shift. Now, people who thought that Bitcoin was only a store of value and a store of wealth, I am one on that camp. I don't think Bitcoin has any other utility. It's quite primitive of a technology in terms of what blockchain is today. But there's just so much value locked inside Bitcoin that people want to make markets behind that, liquefy all of that value, right, into finance, into other primitives. I guess as investors, we behave quite agnostically in terms of preference. There's a lot of markers we need to find behind both founders and the idea, and outside of them, like price, for example, the price of the round, type of project they're and problem they're trying to solve. I find it hard to pinpoint specifically as we invest in quite a broad range of products or services into what kind of derives my own personal hedonism. I can tell you that last cycle, there was a huge emphasis on NFTs, gaming, and metaverse. And feel this was, at the time, the zeitgeist of the culture because of the pandemic. People were stuck at home. Everyone in the world was in their desks. They had a relatively high surplus of time in their computer, time that they would otherwise be spending outdoors, driving in a park, in a pool, with friends, in a bar, you name it. So gaming became an outlet, and through that, it begot the necessity for a metaverse, right? Through gaming, we all thought, wait, we're all going to be spending so much time indoors all the time? Is this the new reality? So metaverse became a sort of consensus narrative that everyone was investing on, right? It's a new thing. And NFTs, right? A way to invest in a sort of identity, right? With a limited collection and become part of a community. It was all zeitgeist, and I think like my own theory, it's because it was a pandemic, right? And we were kind of pushed towards those. We are in a completely different reality today where we actually enjoy the sun. We go to the park, to the beach. So I think the narratives, at least the narratives at this stage of the cycle, are quite different. Not to say that these narratives won't take place. Again, just to say that there are other more interesting narratives going on now with SocialFi behind Farcaster and Warpcast, or meme coins. Meme coins are hated by traditional minded people. They think it's a way to lose money, but it's a casino, like casino itself, Vegas itself is a use case. People that would think otherwise are just, I guess, averse to gambling, but people really like the nature of gambling. And that's kind of a use case that became super, super liquid this cycle, especially in Solana, right? Talking about $3 billion, $4 billion of weekly volume, just ridiculous amounts, even daily volume. So these amounts are super interesting, and I think nobody saw that coming back in September. SocialFi is another thing that started happening before the cycle kind of kicked off, and now it's taking helm in the kind of mindset of people. That's a tougher nut to crack, as I said, due to all the problems with identity, right? Deriving identity. But Forecaster, its founder, Dan Romero, did great thing abstracting away the blockchain component. Pretty much Twitter, but for crypto people. Now, I'm not so bullish on the medium term, just because Twitter is already the world order in terms of where we derive and feed our intellect. We don't only do it on crypto, right? We do it everywhere. Politics, technology at large, AI, everything, all the information we consume is on Twitter, right? And right now, at least as of today, in Warpcast, you only have crypto Twitter in Warpcast. So it's a long time ahead, but it's kind of the first steps, I guess, on the social side of things. And the other narrative is real world assets, bonds, securities, stock itself, gold, silver, whatever physical thing we can value somehow becomes a lot more liquid, right? Imagine having to transport gold. How do you do it trustlessly? If it's on a blockchain, it's on a blockchain, right? Like you don't need to transport it. You can just change ownership in a trustless fashion, right? I think this is the one that's going to catch us off guard pretty much. It's because it's the easiest use case, but also the most boring one. So yeah, I see today the industry a lot more mature. I might be biased and I might be calling it too early because things are for sure going to go crazy this cycle, but I do see a lot more regulation clarity, more mature projects, more transparent projects in the industry. So I guess it's just baby steps until one day we're there. We're at a place where we're legit fully.
Amazing. A lot of stuff. And due to all these things, we've touched on advice for entrepreneurs building in this space. Before we wrap this up, let's talk about a bit, on some things new founders who are coming into the space should be wary of, and to watch out for. What do you think?
Well, depends on which specific niche they're building. But on a general suggestion, I think everyone should beware of all the money that's going to be flowing this cycle. There's a lot of scams going around. There's a lot of people granting money, and all just goes to zero, right? And to projects and to paying salaries. And as a founder, I think you should spend your time bootstrapping your idea and finding a sort of product market fit without going full berserk and growing your liabilities. I think you should be the leanest possible, maybe one co-founder or three co-founders, just going at it full time until they have a working prototype or even clients, right? Paying clients. I think there's just so much bling and capital going around on a bull cycle that it both blinds founders and investors into finding value, right? Finding value within themselves from an investor to a founder and from a founder to an investor, in the form of their project. I would recommend for them to test out their idea, to put it into paper, and not only put it on a deck or in a Git book, right? You need to flesh it out. You need to test it out. You need to create a community. You need to be active on Twitter. I would recommend a lot more publicity on a personal basis towards what you're building with your opinions. One of the better advices I've ever taken from Steve Jobs, it's like my childhood idol, was that the only way you get to the bottom of things or you get things done is asking for them. If you don't engage on Twitter as a founder, if you don't engage with other founders doing similar, you don't learn. And if you don't ask also as well how, why, where they're building it, you won't get to the bottom of it. You'll just forever remain an NPC. You will never be at the real bleeding edge of the zeitgeist. You need to always stay curious, right? So yeah, that's I guess what I would tell early stage founders, especially if they're new entrants into blockchain, right? It's such a nascent industry that nothing's a given. It's like, it's not like accounting or banking or being a doctor. There's not a framework for anything. In 10 years, this will be completely different, entirely different. Bitcoin and Ethereum might not even be on top 10. Who knows, you know? So it serves well having the nature or behaving like you don't know anything. Always asking questions, always being curious, always staying at that understanding that you know less than you think you know. Yeah.
Solid advice. Joseph, it's been a pleasure.
Thank you. Likewise.
For people who are interested to learn more about Blockbuilders, where can they find this?
You can find us at blockbuilders.co. Can reach out to me on Twitter at JoeStrangeQ. I'm always happy to chat. If you're building something, I'm always happy to have a look, to help. And yeah, show me the best you've got.
Thank you.
Thanks, man.